Sergej, great to have you on the show. Can you share maybe with our audience what is really driving these increased volumes that we are seeing right now in the broader DeFi ecosystem?
So the difference between decentralized finances and centralized finances, crypto finances, is that DeFi is a global hub of liquidity. And since the market is very volatile and we see a lot of price increases, especially in Bitcoin, we had all-time high recently with $125,000 US. So there are arbitrage opportunities between all the different markets. So we see huge volumes also in terms of arbitrage. And we see also a lot of institutionals are buying Ethereum, especially, buying also Bitcoin, rebalancing between Ethereum and Bitcoin. And a lot of this volume also happening through decentralized finance, through DEXs.
But do you believe, like, I would argue that a lot of the trading that's happening in DeFi is completely kind of independent in a way than everything happening in CeFi. Do you agree or disagree with that? You think there's more convergence between these two worlds?
So these are two different worlds, and we have players, bigger traders who are trading just in decentralized finances, and same in the centralized exchanges. But we have always the arbitrage volumes. So if something moves up in centralized exchanges, it's going to be automatically arbitrage with decentralized exchanges. So in general, we see volumes growing of decentralized exchanges compared to years before. I think it's already like 20% of the centralized exchanges. In centralized exchanges, it's a little bit different than in decentralized exchanges, since you have sometimes no fees for specific market makers. They can just trade and create volumes with not paying any fees on that. In decentralized exchanges, you need to pay fees, like Uniswap pools charge like 30 bips, 20 bips, 25 bips, 5 bips for stable coins, for example. So it's not possible to create a huge amount of volume just to show something, that the token is.
I mean, the volumes are a bit lower than that, than 20%. It's more like 5, 15, but I see your point on that side. I just want to mention one thing, Sergej. You mentioned recently that I saw recently 1inch is doing an integration with Coinbase. What is the goal of that integration? And is it to try to bridge this CeFi, DeFi bridge, if you want?
Yeah, this weekend we announced rebranding in Singapore in Token 2049. So we came to the idea, okay, let's everything what we have built over the last 5, 6 years, let's unite it in one single place under 1inch.com, and let's address also the business. Yeah, so we launched our 1inch business products where we offer 13 Web3 APIs, since we see those institutionals are very open for integrating Web3, and from our point of view, every business will be a Web3 company in the next 5 to 10 years. So also Coinbase, they cannot afford to stay behind, and had to integrate decentralized exchanges through our aggregator to also offer all customer access to DEXs.
I mean, recently from all the DEXs we see, Hyperliquid has been one, obviously, that's been gathering a lot of attention in the crypto and non-crypto world. What do you think are the drivers or even the reasons behind the success of Hyperliquid and the crazy dominance that has had in really a matter of months?
I think it's simplicity, so you can easily interact with Hyperliquid. It's kind of, I wouldn't say that's a fully decentralized thing. So it's layer 2 controlled by the team, and it's more or less open. So like what DeFi is.
But do you believe that's a driver? Do you believe the lack of KYC, for example, is one of the main reasons behind the success of not only Hyperliquid, but broader DeFi as well?
I don't think so that KYC is a problem for anyone, since everyone needs to cash out, and everyone has a centralized crypto exchange account or brokerage account. So everyone has to create KYC, otherwise you cannot cash out, right? So. And I see a lot of traders, they don't trust centralized exchanges. This is the point. They don't trust, and they don't want to give own funds to the centralized exchange, what we have seen with FTX, that they gambled with the funds, right? So in our decentralized finance world, you don't trust anyone. You just verify what you are signing, what order you are making. It's going to be also at the execution.
But is that true, though? So in the sense that, yes, you're right. I think DeFi is smart contracts, but recently we've seen incidents after the Bybit hack, for example, where a lot of these DEXs are actually more centralized than we think. I mean, the Hyperliquid, the example you just gave, is a good one. Whereas with a lot of centralized exchanges now, they're fully regulated. The proof of reserves are there. There's regulatory oversight. Do you really believe that that's really the trust element? There's more trust towards DEXs versus centralized exchanges?
Those people who are using DeFi, so we do also interviews with all the bigger guys who are trading in DeFi. This is the pain point. So they don't want to give keys, access to own assets to someone who can be hacked. So you have seen Bybit, huge hack, the biggest hack in the crypto history. So yeah, those people, and these are only 2% of cryptocurrency
but there's also protocol
traders,
risk,
right?
On the DeFi side, with a protocol risk, which is a different kind of risk.
Sure.
We've seen attacks there as well.
But like Uniswap is out there for a long time, a balancer on the curve as well. So 1inch is since 6 years out there.
Exactly.
So and we ensure through program that the user gets what they expect. And not through policies and people who may do mistakes. Yeah,
interesting. What is maybe one question on the US side as well? Obviously, we've seen complete change in the US in the last year, and especially with the approach towards DeFi. How do you think that has an impact on the broader DeFi ecosystem? You mentioned Coinbase is entering DeFi, for example. Do you believe that would have been possible without the relaxation and embracing of DeFi that we've seen in the new administration in the US?
I don't think so that Coinbase would just open access to DEXs for own users if it would continue how it was before. And it became much easier for DeFi startups to operate in US, especially if you look on the Uniswap labs. They introduce interface fees, for example, charging fees, earning 200,000 $200,000 every day on that, and they are comfortable to operate without a broker-dealer license with that.